Welcome back to the Dow Jones Industrial Average 4-decade history and economic history, stock market history of all histories, presidents that were involved, monetary policy. The whole thing about this, folks, is one thing. We've gone down a long road over the last 40 years. And the thing about it is we're no better off than what we were. And the biggest pump and dump to U.S. equity holders was done between 2003 to the 2007 14,000 top on the Dow. Remember, they took 30 stocks and they walked them to the moon. And we have collapsed worse than any time in history. And basically, they took out the old bear market high here in the 10-year history, and we had two major collapses. Even though that this is the Dow 30, it's not like the NASDAQ Composite and the S&P now. But the thing about it is you have the full complete history, and the whole reason for it is because I care about you, stockmarketfunding.com. You can join our online trading community at stockmarketfunding.com. Join us because we are the new 21st century firm. Because we're not here pumping you full of exuberance and irrational thinking. What we are here to do is to point out to you where we live in the world today. And forward-looking, that world is going to be part of your life. Look forward-looking. And basically in 2007, we shot down like a torpedo. And 2007, we came right back over here to lows. Watch this. I'm going to draw a horizontal trend line for you from the 2007 low right here. There's the bottom. Nobody ever thought all that exuberance that created the biggest bubble dropped and failed worse than where the bubble was created over here in 2003. And the point, people that live in America today, is that bubbles don't last. Here's your bubble. We went lower. That meant that whole 4-year expansion collapsed in the Dow. And we ended right back worse than where it started. Now, the beautiful thing about it is you can trade and make a lot of money that way, as we did. We shorted the Dow down for over a year. And then we went long off that bottom. And it'll be a 12-month anniversary from this bottom starting Monday when we put in the bottom. 12 months of that has gone by. And basically we've done specials from the 1929 crash, what happened in 1931, and how we've had always these big pendulum swings. But you see, the thing about it is they're good to trade, but they're not good to hold on to. Economically, we are in worse shape than when it started over here in 1970. Okay? And that we came back to if you take a look at this low, this trend line right here, you went clear back to 1997. 6407 was the Dow back in the beginning of 1907, and that long wick down there in 2008, it gave it all back up, and we started right back over there again. What I want you to know is, people, is that I think that economic policy, I think that worldwide policy around the world, I also believe that your current administration is doing the wrong thing. I also understand in my 30-year trading career is that I always take these big moves down and I take them up. And you make more money when they fall, and you make good money when they go up, but they fall faster than they go up. And basically, what I really want you to know, the whole reason about this is that this particular time shot of history is that we have come all the way back up here. And let me tell you something. They pulled this off in 03. Wall Street walked it, and the consumer got stuck. You are the consumer. You are the retail trader. You are the retail investor. And I just don't want to see these things happen to you. We made a lot of money if you come and join us at stockmarketfunding.com. I'm giving you the history of where these expansion cycles fell. And basically, this expansion cycle. There's your 11,000 right there on the Dow. And that's going to be your next resistance level of where this downtrend miserably went down. Forward looking 2011, 12, 13, 14, 15, I see a totally different picture. I also see that moving forward in the years to come, and based on where we're at in the world and the debt that the world has, worldwide derivative debt's well over 600 trillion. I mean, that's more than what the world, all countries of the world put together even make. And basically the U.S. is in trouble, and the U.S. always does what it does. It tries to buy itself out the wrong way, and then it collapses. And when it collapses, you collapse with it. Except this time in history, more homeowners ever have been taken out. Subprime bubble. Greenspan was part of that whole thing. And so were other monetary policy makers. My point of it is that I want to caution the world today that moving forward over the next 2 to 3 years, when you're looking back on this in 6 months from now, we will put a top in and it will fail, and it will be a major third leg down. Okay? And the way that the world was between 70 all the way up to here is a little bit different during those decades. The progressive nature of excessive spending, excessive deficits, and things that's happened in our world have failed. And let me tell you, on the third cycle down, 1, 2, and we're going to come up here somewhere, and we're going to fail again. And the failure is that we always go back lower than where it started. That means this one started here. That means on the third leg down, it's going to go lower than 6,000 on the Dow. And the Dow on the third leg down, as we move through America, I mean, you know, when you take a look at where the breakout handle was back in off the 87 crash, well, let me just draw a trend line down here. Here are some trend lines that we'll draw at the tops in certain kinds of years. We'll draw another one over here. We'll even draw another one right there in 1995. These were the numbers on the Dow. 51, 45, 36, 3. Oh boy, below 2,000 on the Dow. Now, what has happened is that I drew these trend lines so you can see that on this big leg down was much worse than all that exuberance. This was all exuberance, that whole 4 years. And we went lower. And guess what's going to happen, people? We're going to come up. If we get above the trend line somewhere, we're going to come up. But guess what's going to happen? Is we're going to fail, and we're going to go lower than that last low. I did say that that's going to happen in 2010. What I am saying is that when it does happen, it will happen like it always does, and we will break those lows. And you'll be watching these videotapes 2 years from now, understanding what it was. You can make a great deal of money by coming to stockmarketfunding.com. We can help you manage the downside of your IRA. We can show you how to use our risk management proprietary tools that you actually, during these collapses, that always happens, is that you make a lot of money. Just like you make a lot of money coming up here. I'm going to go to part 3 right now, so make sure you come back to part 3 of the Dow.